I want you to know that at the end of our fireside chat, we're going to leave a lot of time for networking. But before we actually even get there, I thought, well, why don't we just step outside our comfort zone a little bit to get you guys comfortable? And I'm seeing the faces already like, shit, what is Jazz going to make me do? Myself, my business partner, who you're going to hear speak very soon, and the rest of the team, I mean, our goal for 2024 is to put on this specific event every third Saturday of the month, Brunch with REC, in person, as well as we're live streaming on YouTube and Facebook to our 12,731 community of REC insiders. So it's taken us a while to get there, but with your help, we've gotten there now. So before we start, I want you to give yourselves a round of applause, but stand up. Give yourselves a standing ovation. You can sit. And I say that because, again, it feels like it's -20. It's the third Saturday of a cold January day, and yet you made it out here. So for all the people who are saying, nobody wants to talk about real estate, we just showed them. Right? And moving forward, every single month, as I mentioned, we want to bring the topics that you guys want to hear. Luckily, myself, my business partner, and my team, we have a pretty big Rolodex. And for maybe the kids watching, that was this like old little mechanism. But now we say in our phones. And our guest speaker today is someone that myself and my team are blessed to know. He's been in the real estate business pretty much his whole life. He runs one of the largest real estate firms in the country. And my business partner, Simeon, and him are going to be speaking about what's happening in the market. Because there's a lot of noise. Rates going up, rates going down, sideways. What's happening with the value? Is real estate even a good investment? And for some people it is, and for some people it's not. What our job at REC Canada is to help you declutter all that. Not to make you invest, not to make you buy, but at least inform you with facts, educate you, so you can make a quality decision yourself to see if real estate is something that you want to invest into, if it's the vehicle that you want to choose to create wealth. It's not for everyone, but the ones that I've seen use real estate as the vehicle have been able to create wealth in their life. And so I want to bring up the guy that doesn't really need any introduction, but he likes when I say his name. There's this weirdness with him. My beautiful, beautiful business partner, Simeon Papailias first.
For those who don't know me, I'm CCM's Seaman.
He has a lot of names. Simeon, Simos.
We're going to make a t-shirt with all the mispronunciations.
The names. We're also live. On YouTube, on Facebook, so please behave today. Please behave. At least try.
Here we are.
And as I mentioned, Simeon's going to be speaking with our guest speaker today that some of you know and some of you don't. He's not only just a very good-looking human being, he really knows what he's talking about. He's helped thousands of our clients get into the world of real estate in a myriad of ways of investing into real estate.
Very successfully.
And so without further ado, I want to introduce Sasha Cucuz.
I always feel like I have to high five people.
Yes, high five.
It's like a fast. So the funny thing is, Jazz keeps saying it feels like -20. It is -20. That's why it feels like it. And secondly, about 90% of the reason I came was I heard fireside chat. For obvious reasons, no fire. So I feel like it's a little bait and switch, but that's okay.
It is a little bait and switch. For those who don't know who Sasha is, who Greybrook is, and what they do, I spoke to Sasha this morning, and I said, let's turn this whole thing all the way back. We always sort of take it for granted that people have seen you before, maybe because we have been working together for so long that it's like, oh, just speak to Greybrook. Or, well, who's Greybrook? Not everybody's heard of Greybrook, but for us, it's been 20 years working with Greybrook. So today, I want to turn it all the way to the beginning. Pretend none of us know who you are, what you do, what your firm has been doing for some time. The only thing that I will say to everybody here is that Greybrook is the authority in the development world. Not as a builder, not as a capital raise, as an advisory, as the benchmark and standard that is respected, because I have seen you, we have been together on specific panels, but I have seen you in panels that top world economists are on, global summits. So the reason Sasha is here, not to say that you're too good for anything, but we're blessed to have you here is all I'm trying to say. I'm not trying to pump anyone's tires, but know who's in the room. Google it later if you want. But some of the things that come out of this gentleman's mouth are facts that he knows from sources much bigger than most of us. People who spend all their time, effort, and money studying and pulling data and research. And I think what I will take credit for is that I have had this knack of following people that are smarter than me. I never seek to be the smartest person in the room. So that has served me very well. I will tell you as a fact, it will serve you really well if you do the same. So thank you for being here, first and foremost. And just give us a brief intro. Who is Greybrook and who is Sasha?
Sure. So Sasha is also not the smartest person in the room. I never seek it out because I can never be it.
I'm not trying to make it weird.
No, not at all. I mean, but you said something really important, which is like, following the right people, right? And that, there's a lot of smart people out there. And I think the best way to build knowledge is to follow a lot of different smart people, right? So that's an important thing. But so me, I'm a co-founder of the company we're talking about called Greybrook. I have two partners that we share the responsibilities with. One of them in particular is very active with me. One's kind of chairman, so he's no longer really operationally involved, but the other one's my co-CEO named Peter Politis, who, another good Greek. But our firm is really an investment firm. So Simeon mentions advisory, asset management. What we do is we try and understand markets to invest in real estate. We've chosen kind of a very specific asset class, that being residential real estate. We partner with best-in-class developers, some of whose representatives are in the room today, and we invest our money alongside them. But what we do, to your point, is a lot. Like it takes a lot of work. It takes a lot of dedication. We have over 100 people. We manage close to $40 billion worth of development.
That's B.
Billion, with a B. And that's across North America. So we focus kind of in Canada on Southern Ontario, we'll call it. And then in the US, we're in multiple different places. And there's reasons that we're very focal here and not so focal in the US. But in aggregate, I think between us and our partners, it's somewhere around 45,000 units that are currently either built or have been built or will be built or in some various stage of development. And then we also, together with one of our partners called Marlin Spring, we own a platform called Greyspring. See the innovation there, right?
Yeah, it was very
Gray
unique.
From Greybrook and the Spring from Marlin Spring.
Groundbreaking.
Took focus groups and all kinds of different things. And Greyspring manages apartments. So not only development, we buy apartments in markets like Montreal and various parts of Quebec, and the goal is to buy them and to renovate them. So not unlike what some people do probably in this room, along with their pre-construction activity.
Mm-hmm. Well, $45,000. I mean, that's okay for a small fry.
Yeah,
it's fine.
I
have 46,000. I have 46,000. Your Canadian operations started with. You're a home manufacturer.
Yes.
So you're an investment firm. So how do people invest with you, and what are they investing in? So I'm trying to strategically go backwards to tell a story.
I will rewind for 1 second.
Yeah.
So back in the day, the very first day, let's call it.
Yeah.
We met a developer called Plaza Corp, and we had a relationship with them. And that developer basically said to myself and my partners, why don't you guys invest with me in this development? So it was a bit of a foreign concept. It was a condo development. We hadn't really thought about doing that. Actually, we had mobilized some capital to invest in tech and healthcare and a bunch of different things, which we did. Not so good. Real estate went kind of good, so we kind of stuck to that. But so that day one, we said, okay, well, how would we do this? Well, we can put a joint venture together. You know, I'll put up some of the money, you put some of the money up, and then I'm going to go away and go do my thing, and we'll split the profit in some formula, which we did, and it worked kind of well. So we did that again and again and again. And what we the revelation we came to was, you know what, we're doing this with our own capital. This is a great thing for people to invest in. It's a great way to make money. We were making returns kind of on an annualized basis that were, you know, over 20% a year. And obviously, like any smart finance person, we're like, great, I'm going to go talk to Pension Fund A because they can write me a giant check and that's that. And I went in to talk to Pension Fund A and they're like, who the hell are you? And, you know, where did you come from? You're 27 years old. No dice. So we said, okay, well, maybe my dad would like to invest in this and maybe my mom would like to invest in this, and, you know, friends, uncles, aunts, and that's kind of what we did. So the next deal, we put our own money in, and then we ran around and we got investment from some of our family and friends to be able to write a bigger check, do a bigger deal. And that's kind of how it all started. So now fast forward to 20 years later, and the firm has about 10,000 individual accredited investors in 20 or 32 countries, I think it is now. And we have institutional investors, about 30% of our capital, but the vast majority of our capital are like the people sitting in this room. And we just felt that it was the best possible way that you can invest your money, as you said, in the production of real estate. Like, people inherently love to invest in real estate. Presumably why you're tuning in or in this room is because you like to invest in real estate. There's different ways along that value chain that you can participate, right?
And that's exactly where I want to take the convo. People like to invest in real estate because real estate inherently is made of bricks and mortar, meaning it's a real tangible asset, one that you see, not one that can disappear, mess with you. Somebody messed this up, somebody messed that up. And I am no stranger to any of it because I've been messed with at the highest level with financial instruments. I have been part of financial instruments that got meddled with. So I've lived this story, and there's a reason why 95% of my investments are in actual physical real estate. What you offer is, in my opinion, it's kind of like it's the circle of life for real estate. It starts with dirt. I remember when we first met, this must have been, I don't know, 14 years ago. It's 2024. Yeah. So it was 2010 when we met, and we met at a Build golf tournament. Build is the Builder Association group, and we were at this golf tournament. It's a charity event, and we meet Peter and Sasha. And again, 15 years ago, I was 29 and you were 26 or whatever. But I mean, we were much younger, and the conversation was, so what do you guys do? We sell real estate. What do you guys do? We were looking to buy land, and we started this company, and we were in healthcare, and got here. I was like, okay. So what actually do you do? Because we're just trying to, so why are you in a real estate event? Like, what do you do? Well, the land that the condo you just sold, that was our land. What do you mean? That was your land. You're the builder? No, we're not the builder. We didn't know. As real estate agents, we didn't fully understand the process. When you see Tridel, it doesn't mean it's Tridel's land. It could be. But in most cases, it's not. There is joint ventures, deals, and more deals that happen in those 5 to 10 years before you ever see a door up, which is the development process. Tell us about that time, because when you secure, let's say, this where we're standing today, this is a Cadillac Fairview site. This used to be a Shetty dive mall, built in the 60s. Also, like, I remember coming here, like I shopped here. I used to live in East York. We came here for TD Bank and whatever the case may be. I've been to this mall. They bought this land, and look around you right now. You're sitting in a beautiful office surrounded by brand new condominiums, mixed use, restaurants galore. An official plan was made. Thousands of people contributed to the planning of what this will look like, how it will be done, who's going to dig the sewer, who's going to pass the power, how all these things get done. I never thought of it before in my life until I realized you can make millions of dollars investing in the process. Tell us the process.
Yeah. So you wouldn't be alone to not have known this. In fact, if I spend a lot of time with different levels of government and shockingly planning, yes, master planning, yes, how money's made doing it, not that much. But that's the root cause of everything, which is ultimately, when you hear people say like, well, why is there no rental, right? I talk to government officials all the time. They're like, Toronto needs more rental. I'm like, really? I didn't really think about that, right? Like, it's not that the development community hasn't thought about rental. It's the economics of a rental building versus the economics of a condo building, and how the equity makes money and how the debt lends to it. And there's a whole bunch of parameters that it just goes like, what? I don't know. We need rental. So the point being is that, we start at the very beginning. So the very beginning being picking a market, right? So you always hear in investment, the top-down approach. So top-down means top is picking the macro of a market. What are the strong characteristics that you're looking for? That's why we've zeroed in Canada very specifically on Ontario, right? And I want to touch on the market in a little bit, but start with picking a market. Number two is looking at what the necessities and needs are of that market within a planning framework, right? So the Toronto City has an official plan. The official plan has a whole bunch of designated uses. And then you also look at what's happening with the city. Is it growing? Is it shrinking? What type of people are coming in and what are they looking for? And then our job is to effectively work with developers directly to identify opportunities to bring, whether it's this type of thing, a mall, or whether it's a condo or whatever the case is, bring it ultimately to life. And that starts with finding the right areas. And development is very much, if you build it, they will come, is something that actually makes a lot of sense. Like when we first, I remember thinking back to one of the first sites we bought with Plaza Corp back in 2005, was in Liberty Village. Liberty Village today, you go to Liberty Village, there's like thousands and thousands of condos, there's restaurants, there's retail, banks, gyms.
There used to be nothing.
8 million people walking around, and that back then there was like one condo, tumbleweeds, railroad tracks, more dirt, and then nothing. And then like way on the other side, you got the King West.
It was legit
was
a
nothing
shitty. It was a shitty part
There
of
was nothing
town.
there, right.
There was nothing there. Like, it's somewhere you would walk through when you're drunk at 2 a.m.
Yeah.
It's kind of what it feels like
Yeah.
when you're 19. Maybe
Exactly. No,
like
that's exactly what it was. It was actually called Liberty Village because there was like a city jail back in the day, and your first steps out of the jail were.
Come on.
Yeah, that's what Liberty Village.
I was on the money.
So that's what it was. But so the way and this is a good example of explaining kind of what we do and how we do it. But back then, if you thought about where King West is relative to Liberty Village, right? So it's a couple blocks north, but right on the same line. There's a lot of development going on there. And we looked at it and said, okay, well, I can buy land on King West and I can pay at the time, I don't know, $55 a buildable foot. Or I can just 2 blocks south buy it for potentially $30 a buildable foot. Do I really think that, will people only ever want to live on King West? Well, sure, when you today that might seem the case, but when you start building and you start bringing in the mixed uses and all these other things, then it becomes a community that people want to live in. So we identify land, we'll partner with a developer to buy that land, and we are an equity investor together with our developer partners. So what that means is in the ecosystem of development, or anything for that matter, just like your house and your mortgage, you have your equity, which you buy, and then you have a mortgage, which is the debt. We put up the equity, therefore we were the owners, right? So our money and our investors' money, along with the developer, own that land together. We will take it through a process to get it approved and entitled and permitted ultimately. Then we will do all the things that you need to do to build a building. You'll design a building, you'll do all of the work that's required to get that building to come to life. you will run a sales program ultimately to sell these units, because here in our markets in Southern Ontario, you have to pre-sell your inventory to be able to qualify for construction from a financing perspective. And we'll go ahead and do that. And then once that building's built, or once that building's sold, we'll go ahead and build a building. And when probably many of the people in this room buy a unit and close on it, that's ultimately how the equity in the project is compensated, right? So if you think about it, you have your equity, you have a construction loan. At the end, you get all the closings, everybody closes, you pay off that construction loan, and the money left over is the owner's money. And that's how we make our money.
Amazing. And I'm going to go back to the circle of life for your investor cycle in a second. What I want to say is there's a very strategic reason Sasha is here with us today. They don't have a live deal right now, so they don't have something. There's nothing to sell you from a Greybrook perspective. So from an audience perspective, what I want everybody to take home is the fact that January and February is when people make decisions with their registered funds. Their investments, unlike real estate, are RSP eligible, not legible, are RSP eligible, meaning that you can put your funds into a self-directed account and manage the destiny of your funds. This specific company is one that we have been putting our investors in for a very long time because of their stability, dependability, and actual performance. All of you do your own due diligence, always and forever. But from our perspective, we are huge fans. I am personally an investor in Greybrook, and I will continue to be. But on the more important side for me as a real estate broker, I make money, I make my livelihood by selling real estate. And this has also been a massive part of our relationship, is because we have been very successful in getting clients to them, we also get something back. And that tit for tat in that case means access and timely access to inventory. Up to a year ago, before interest rates were 8 and a million%, flipping the country upside down, to get access to a condominium was a lot more difficult than you may think. You might think that you can just go buy one. When you just go buy one, you probably paid $100,000 more than what you should have. Not that it matters in a market that was going like this because there was free money around, but it matters now. Because every single project that we sold in the last 3 years, inclusive of the beginning of 2022, we have a 100% close ratio. A guest who's here, Miss Erin Millar, if you want to just put your hand up. Thank you for being here first and foremost today and supporting us always. She's the Vice President of Sales for Marlin Spring Developments, one of their very close partners in both development and in value-add apartments. And their CEO is also a beauty of a human being, Ben. What I'm trying to get at is everything we sold appraises. Everything we sold, our clients paid less than anybody else. And the way we do that is by tit for tat. The same investors who went 5 years before you bought your condo, think of this. They invested in the land. They did the work, the 5 years. Your capital was working, meaning when you invested with Greybrook, the money didn't just go to an account and sit there. It was spent, processed, all the different things, borrowed against, secured against, a trillion things that happen in your day-to-day life. For you to exit that project, somebody has to enter the condo. So the Greybrook investor is winning, and most Greybrook investors buy their own inventory because of the pricing, etc. So they're actually like fulfilling their own destiny. And we have the opportunity to bring our clients into that destiny. Meaning a Greybrook investor who is going to get their money out on closing is also buying a unit at a preferred price. So they're going to win again for the next 5 years. And we very much look at investment in a 5-year cycle. If you buy now to sell next year, don't call me and don't look at me. You might make money, you might win, but more than likely you won't, because you're trying to time the market. Anybody trying to play that game, most of the time loses, because there's fees attached to it. Big fees, 3% of $1 million, $30,000. For you to make $100,000, have to pay capital gains, fees, lawyers, taxes. You didn't make shit. You think you made money, but really you didn't, and you speculated and put your capital at risk. So a 5-year cycle, any real estate that was bought in 2019 today is worth 20 to 40% more than what you paid for it. If you look at 2019, anything purchased in 2014 went up almost 60%. That was just a crazy 5 years. Look at 2014 and look at 2009. Well, I can tell you that because I bought my home in Oakville in Bronte Creek in 2010 for $499,000 at the heels of the epic US collapse. The builder gave me $50,000. They paid me to buy the house because I put $50,000 down. They gave me a $50,000 credit to spend on the home in Bronte Creek, an area where my house just transacted at $1.9 million. I don't own it. I sold it in 2016 for $1 million. That was my first lottery ticket of my life, where I got tax-free $500,000 in my pocket. And I could not believe it, and my life has never been the same because I invested all of it. Now we have dozens of doors under management for us, not 45,000. But we're well on our way to 46,000. Point of the exercise, why Erin, I asked her to be here in case anybody has questions. You don't have a live deal today, which is too bad. But the market is a very difficult market to actually make a deal work. I was speaking to your partner. Sasha is on the security side. Peter's on the real estate side. I send him sites all the time. I get rejected every single time because they're freaks. Like, they'll find the dirt very quickly. They have people everywhere. And he got back to me. I sent him a site in Stainer 4 days ago. Yeah. He got back to me yesterday. The site needs 1 million cubic meters of dirt. Water's a disaster. The people who bought the neighboring development, so who would be your partners to share the infrastructure, like building water treatment plants, etc., because that's what they do, which is insane. Like, that's who builds this shit. Like, that's how they come to existence. Like, nobody knows when it happens and who does it, but now I do. So he goes, to put the water in, we're talking 50 million. Cortellucci, so Cortel Developments is on one side. On the other side is a new Chinese developer who doesn't talk to anyone. On the other side, there's this person who will not do anything. So basically, no thanks, because I'm going to go to war with everyone. I'm going to have to pay for it, sue them later. Oh, no. So right now, you don't have a deal with Greybrook because they're hard to make work. So when one does come, I'm telling you, pay attention. We have an entire interested in list that we run. So anybody that has questions about that component, you can always use our concierge to get in. Barry is here. Barry is here as well. That's kind of our point person at Greybrook. Getting Sasha on the phone is not the easiest thing to do, but getting Barry is. So they've made it actually very easy. So that's our point person for our concierge. Tyler speaks directly, has a line in, and we get advice. Erin Millar is here because she represents Marlin Spring, your partner. And a few years back, and I'm not sure, I don't know if I'm in that Queensway.
All the Queensways are with Marlin, I think.
So I'm vested in one of these. I don't know if it's Queensway 4, 3, or whatever the case may be. But she's here representing sales. And what we said, Sasha's coming on. I want everybody to understand the process. It's RSP deadline. I don't know what they have on the go. But if you are looking at investing your RSPs, Greybrook should be one of your top choices. So as far as diversifying, as far as taking control of your registered funds. On the condo side, the second cycle of real estate. So the first one is land. You come in and you get exited by the buyer of the condo. We don't have a lot. It's been a very busy last month for you guys. But we do have an exclusive allocation of, I believe, 6 or 8 units. I don't know what it is, whatever rule says, 6. Thank you. 6 units that are at original pricing, meaning you're not paying a single dime more than what they penciled and pro forma the project at. Every 30 days, 60 days, again, the reason these guys are successful is based on activity and sales, prices go up. I mean, if there's a flood to the sales center, they're going to close the door, change the prices. They don't need a flood. They just need to sell their units at the highest price possible. It's a for-profit company. So every 30, 60, 90, whatever the cycle takes, prices go up once, twice, 5, 10, 15 times. This is the first price. It's the first deposit structure. It's the most incentives. And those incentives are created to limit your exposure and bring your risk down. Whether it's, well, in this case, we have development charges in the city. I don't know if you saw an article yesterday that said, congratulations to anybody who owns low-rise real estate in Toronto. You just made 40% on your home. Taxes are going up 50%. Oh, sorry, development charges are going up 50%. Again. They're going up 50% again. In the last decade, they have gone up, what, 400%?
Probably more. Yeah.
Something that ridiculous. Because the city uses housing. They call it an affordability crisis. They're pretending to want to fix it. They gouge it. They destroy it. All their actions from a politics perspective is against creating affordable homes.
Yeah.
I can tell you mathematically that every unit, if you think about 100% cost, right, to get it up, about 30 cents on the dollar is just straight
Government.
Whether it's a form of tax or some type of levy or fee or development charge. Where we operate in the U.S., like we do development in the U.S., and there are markets like Miami, for example, where that total is like 6. Right, so it's five times, and then we're talking about affordability. And you don't want to get me started.
I kind of.
I sat on all the panels, right?
So I kind of do. I'm gonna. We have 15, 20 minutes. So I want to finish the thought of these condos, your opportunity specifically, because this is your building, this is your investment. So what I want to be very direct about, if anybody understands that this housing crisis is not going to be solved for sure, guaranteed for at least 10 to 15 years. And that's if they do everything right from this second on, which they won't.
Yeah.
Guaranteed.
That's highly unlikely.
I think that's the best way to say it.
Yeah,
Not guaranteed, not anything, highly unlikely. Because they brought a record number of immigrants in, qualified, good people, in the last quarter of 2023. It made headlines. 500,000, what was it, 400,000? Something stupid.
That, yeah.
What are you doing?
You want to go to 500,000?
They don't have a choice.
By the end of this year.
They don't have a choice but to bring these people in because we don't have the workers. We don't have the fertility rates. I actually asked the smartest people I know, like, am I losing it here? Is this the most backward thing I've ever seen? Like, no. There's no choice but to do that, or else your country will be bankrupt.
Yeah.
But the housing is the opposite.
Yeah.
Policy is the polar other opposite. So nothing's going to be fixed.
Well, yeah.
All I have to say is I'm very lucky to be in this business. I'm in a good business. So
policy, like
that's how I feel, though. I feel really good about being in real estate.
Yeah. So I'd say a couple of things. So one, on the immigration thing, you're right. You're absolutely right. I mean, the boomer generation they're called the boomers because that was the most population growth. Well, they're now past working age, right? And fertility rates are low, and generally speaking, so the only way to maintain the social infrastructure and costs, like generally just think about healthcare. The cost on a per person basis of care obviously increases as you get older. So that cost continues to increase along with others, and you have to create working age people if you're not doing it organically through people getting married later. Like there's a bunch of different reasons. So anyway, so you got to do it. The problem is the policy is very uncoordinated, right? So immigration is a federal policy. Planning as a framework is a provincial policy. Control over what actually gets built and when is a municipal policy. and none of them are particularly
In line.
communicative or in line. Okay, so
And there's overlap
Yeah.
to make things even worse.
yeah, I mean, like for sure. So there's a number of things that make it very difficult to accelerate the pace of development. So simple economics would tell you that, you know, if you have more and more people, and Canada is very unique. So again, we operate in the US, and I say this a lot when I'm in America because Americans don't know Canada like we know Canada. And one of the biggest things is if we get 1 million people that come into Canada, the US might get 1 million people. They've got 340 million. We've got 34 million, right? So generally speaking, that nominal number on our denominator is a big impact. The other key difference is there's about 40 metros in the United States that have over 2 million people. Canada has 3. One of them, language is an issue, Montreal. And then you got Vancouver and Toronto. So people that are coming, like gone are the days when my parents immigrated from like a village and coming to a city of 50,000 people was like a metropolis.
Yep.
Well, people are coming from parts of the world that are very densely populated. They're coming from parts of the world where they're used to urban settings.
Different standards.
And so if in America, 1 million people show up to the border, proverbially, they go like this.
They have 40 choices of
to
dense.
live like a relatively similar urban lifestyle. And why is that? Because if you're a company, you can pick from several cities where you have a talent pool. You have a, you know, in Canada, it's just not that, right? So you have people that zero in on a certain part of the country. So when we talk about fundamentals and why at the beginning, if you remember, I said we focus on Southern Ontario and Canada and only Southern Ontario, whereas in the US we do other things, is because of this. You have this population magnet that used to be Toronto, then expanded, and now it's kind of a Southern Ontario phenomenon because of affordability. Not just affordability, but also the type of housing that people seek, okay?
Well, and the GTA, all the communities around have leveled up to the because they had to. Like Toronto has, like Oakville is Toronto. Like there's no break.
For sure, right?
So it's just the community has just grown so much.
But it's I'm talking about even the next frontier,
Yeah.
right? Like Cambridge and
Barrie,
Waterloo
yep.
and all these places. Then on the flip side, the thing I was describing about the different levels of legislation, like you're seeing this play out in real time. Like you're seeing it play out in real time. Like the province made some decisions around the green belt. So obviously development is very political. Housing is very political. It's economic. And none of these things ever line up, right? And then the process in and of itself. So think about it, like the federal, they say, we need more people. Great. People aren't restricted to where they can go. They try to provide incentives, but really they're going to go where the jobs are and where they want to live. Brings them to Southern Ontario. And then you have a province that has a fairly well laid out framework for planning. And then you have a city that functions, I would say malfunctions, and I'll tell you why. And this isn't a slight on the counselors or the planning staff, because many times planners will say, you know what, this submission makes sense. You guys are going to build this building, maybe tweak it here, change it here, but you're generally in the ballpark. And then the counselor is supportive of the planning staff's recommendations. Why? Because the counselor is a politician, not a planner, and they rely on their teams to be able to give them the right advice. And then they sit in a room like this full of people who are like, too fat, too much traffic, too tall. When I walk my dog on a Tuesday, there's a shadow, and absolutely not under any circumstances. And then you leave the room and you go to the counselor and you're like, okay, so I tweaked all the things that you guys said. Oh God, no. Oh, no. Can't do any. Did you hear that? Well, the counselor is a representative of their constituents. They're not there to protect the next constituents that are coming into their riding. They are there to represent the views of their constituents, okay? So then that process gets pretty ugly because the counselor doesn't want to make a decision. Because if they support
He'll
the
be
development,
judged upon it.
right, there's the support development, people are going to be pissed. The easiest thing to do is nothing.
Yep.
And then we go and file an appeal at the OLT.
The old IBM.
Right. And then you end up going and appealing and blah, blah, blah. That takes years. So when I sat on the Ontario Affordability Task Force with this provincial government, stuff like that, like I was showing them, I'm like, we had a project together actually at the Stockyards with Marlin Spring.
That task force, by the way, just to put this into context, is what led to the passing of Bill 23.
Correct.
So that task force was Tim Hudak, Ontario Real Estate Association CEO,
Jake,
yourself.
Jake Lawrence. There was a bunch of people on it. Jake Lawrence ran it, and then there
A
was
bunch of
people like me
great
that were-
people were on it. And the result is, I think on the next brunch, either the second or third, because we have them planned, I'm actually speaking 100% on what is the biggest real estate opportunity of this country's history, which is Bill 23, for retail investors.
for sure. Like so.
Well, institutional too. They were buying single family homes, let alone. Anyways, we'll talk about
Blackstone just bought Tricon. There's
Yes.
a number of different things.
So I don't want to switch it, but that task force that he sat on, it's so important because that's where those decisions happen. So
yeah, and there's a lot. Like I think that if anything, this provincial government has shed a light amongst the public on supply as an issue, right? If you think about back to 2017 with the Fair Housing Plan, with B20, the prior government, which is, not to get political, but the Liberals come at it from a demand side and the Conservatives come at it from the supply side, right? So the Liberals come at it from the demand side and it was like tax, foreign buyers tax, let's raise the, interest rate.
well, it's reactional is what it is.
So, but what that did was really not solve the problem because you need more housing, right? If anything, people may not agree with the methods of this current administration and it's caused a lot of friction. But at the end of the day, they've really publicly made people aware that we have a supply problem. So now when you're sitting in these community meetings, half the room is like the old regime of like too tall, too fat, whatever. And half is like, can you shut up, man? Like we need housing. Otherwise nobody, like if we can't build anything. And now you're getting this ability to move things a little bit further through planning. But anyway, all of this to say that you have this tap of demand that just continues, and getting anything built, if you've ever tried to like cut down a tree branch on your own front lawn, will take many, many moons. When you take that fundamental imbalance between the supply and demand, there is no other alternative but prices going up. So when we think about, you made the comment, which I think was a very good comment, about thinking in longer term increments. And this is something, whether you're talking about equity markets, whether you're talking about whatever, like investing 101, the first thing people tell you is like, you have to be a long-term investor. That's the best strategy, right? You hear that all the time. And then you turn around and every analyst is looking at a company on a quarterly basis, on a minutely basis, and it's ridiculous. It's ridiculous. I have friends who run big public REITs. We have partners who are public REITs. So they're public market CEOs. They're reporting every quarter. And when you talk to these guys, they'll tell you the same thing. They're like, it's inherently insane. Like really, we are making decisions and investments for the next 10 or 15 years that I'm being judged on every 3 months. It's insanity. But it is what it is. But the people sitting in this room, the retail investors who don't report to a board and don't represent a bunch of constituents, if you take a long-term approach to investing, this is why this boggles my mind. Everything that's happening today, I get the question a lot of like, well, what do you think about the market? What are you doing anything differently? My answer is always,
Don't you dare.
What?
I'm going to shut you down in 2 minutes and ask you that question.
Oh.
Don't answer it. Thank you. Appreciate it.
I will stop.
Thank you.
The long-term strategy is the right strategy because real estate is inherently a long-term asset class. So I wouldn't be so concerned about today relative to tomorrow.
The long-term effect is 2 or 3-fold. The whole point of investing in real estate, it's not just your primary residence. That's your primary residence. I actually hate calling that an investment. It is because you're not renting and value goes up and all the things, but that's your primary residence. When you're investing, the actual metrics that we need to talk about is you're providing housing to the market. You're a housing provider, not a slumlord, not this, not that. You're a business person making a business decision. You're providing housing where somebody's going to build their life, live their life, create memories in, all the things. So the fundamental concept of being a housing provider is positive. You're not selling crack.
Can I say something there?
Sure.
Crack.
Crack, man.
You highlighted an extremely important thing. Okay, when you talk about the ecosystem, as we're talking about the ecosystem of a house at the end of the day that an end user lives in, required a person like me or Marlon or somebody like that. Then it required the pre-construction buyer. then it required a renter, then it required an end user at the end of the day.
It's insane.
Because people who are end users do not plan their decisions generally over 5-year increments.
Correct.
It's like it's usually a driven need. Like, okay, I need a house. I need to move my family. I had another kid. The point is that happens in many months. So one thing that the government, I think, if you think about like all the press around investors are bad for the market, the thing that I was really emphatic about on these committees was making it very clear that when you sit here and you say you need rental housing and investors are bad for the market, I'm like, that demonstrates a fundamental misunderstanding.
No, you're shooting
that
at the mirror.
ecosystem.
You're shooting at the mirror.
Correct.
It's insanity.
And so I said, what I think you mean is that speculators are bad for the market.
Correct.
I think what you are trying to say is that investors are an absolutely critical part of the ecosystem. Otherwise, this thing doesn't get built ever. And I think there's been now like this realization, and you're starting to see much less of that, because early when they were talking, before Bill 23, when they were talking about what legislation is going to kind of, where should they focus, there was a lot of talk around, well, we got to get the investors out of the market. They're distorting the market. And I'm like, be careful. And you need to, again, distinguish between speculation and investment, because investment, whether it's my form of investment, whether it's your form of investment in pre-construction, is critical to housing. There is no ambiguity about that. And they need to understand that. And I think this administration does understand that.
And I think this room specifically, it's our life's work, the REC Canada group, myself, Jazz, and our entire team. We yell it from the rafters. We're very, very vocal about our opinion on housing, along with politics. I really don't care what anybody has to say. Facts are facts. If your work is asked backwards, you're going to hear it. Whether your constituents or not like it, it means nothing to me. But don't look for solutions when you're part of the problem. All this to say, because I want to conclude that, because I have just one last question for you, which is your outlook of the market. Cat's out of the bag, I guess. All this to say that the cycle, what I want all of you to be educated on today is that cycle. Greybrook makes money for themselves and their investors by selecting the best pieces of land, adding the best value to them, meaning the most density or the best use or whatever the case may be. It's the ultimate value add. It's not adding a basement to the home. It's adding 400 living rooms to a 60-foot lot. That's value add at the highest level. So you make money when you invest with them on that change. The money that you make, you're going to get that check when you buy the condo. So whether it's their own investors buying condos or you buying a condo, that's when that investor is paid out and this investment starts. In 5 years, when we sit back down and talk about the said condo, it's going to be worth, we believe, X amount more, because that's what our due diligence tells us. So we don't sell any product. We sell 6 to 10 projects a year, depending on the year. Last year was 5 because nothing made sense or worked. But the year before that, we did like 14 launches, the highest ever, because there was a lot of great projects. This year, this is the first time, like typically when we do a launch, we do between 20 and 30 unit sales. Like that's what we try to have for inventory. In this case, it may not be that easy to get that kind of allocation because it's a smaller building to begin with. But at the end of the line, there is a portal that is going to be emailed to everybody. Take a look at what that looks like. Understand that the location that these guys invest in and why we believe in it, it's on the Queensway at Kipling. It's transit-oriented. It's location-oriented. 10 minutes to airport, 10 minutes to hospital, 10 minutes downtown. Well, 2 minutes to hospital, but whatever the case may be, it's surrounded by life's amenities.
And more affordable, right? Like that's a big...
Well, so that's the thing. So when we say it matters, like everything matters. Right now, for sale in the direct corridor, like you may not talk about this because you represent a specific company, but I don't represent Marlin Spring. I shop them and we beat each other up for price. I got to get you the better deal so I can do more sales. They got to protect their bottom line for their investors. The world as it works. But at the end of the day, I have to make a choice. There's Kipling Station, there's Arcadia, there is at least 5 or 6 right now trading at $1,300 to $1,400 a foot. Some at $1,275. This project average is $1,175. And it's not because they're dumb or want to leave money on the table. It's because they want to sell their project profitably at a great price for the unit. And that's why their sales are at X amount sold in a specific period, and other people are in trouble. And a lot of people are in trouble right now.
I agree. The one thing I want to say on, like, we talk about not working, projects not working, and that's why there's no volume. I'm going to give you a different lens. The projects aren't working because of the market and its current psychology. And the biggest variable, there's 2 variables. There's confidence, and in terms of the inputs and assumptions you have, because timeline, like if you're looking at it as like, okay, over the next 5 years, I need to make X dollars. And the numbers aren't looking like that right now. I guarantee you in your financial model, if you added 1% to the growth rate, your trajectory changes like this. And all of a sudden that makes sense. Now, why doesn't somebody just add 1% to the growth rate? It's because they don't have the confidence to do that based on what's happening in the world.
Yep.
But I can show you and tell you that through, forget my 20-year history, I can show you 100 years of history that would suggest that when you have the fundamentals that we talked about in any asset class, I don't care what the asset class is, if you have enough duration, like this is why sometimes I don't even understand what we're not, sorry, I know psychology, I understand markets, like this is what I do. But like as a professional investor, part of it is you got to put the blinders on and forget all that. Like you have to just look at the data, look at the numbers, look at history, look at demographics, all the things we do. And I'm sitting there saying like, okay, so the price is X now. I guarantee you 5 years from now, guaranteed, you can, it's recorded. I assure you that you will look backwards at a chart and you will see a sustainable upward trend, and nobody will remember the points of volatility. It is to the point you made earlier where people try to time markets on a short-term basis. And this is why when I'm asked the question, well, what are you doing differently? The answer is no. And sometimes, or nothing, I'm doing nothing differently. And people, their eyeballs pop out of their head like, well, what do you mean? Like, well, the world's changed. And I'm like, well, if you have a fundamentally good investment thesis and you have a longer term time horizon, then you technically, if you start doing something differently, you're going to hurt yourself. Because now I'm trying to time markets. And that's not, it's just not going to work. Forget real estate, the most liquid asset class in the world, equities, right? The S&P 500 has beat every manager over the course of 30 years. Listen to Warren Buffett, the best investor in the world ever to be. Listen to that guy talk, and he'll tell you that everything he did, buy companies, sell companies, pick this sector, that sector, everything Berkshire Hathaway did, if he had just taken his dollars and put it in the S&P and went home and ate McDonald's every day like he likes to do, and ice cream cones, and he eats like a 5-year-old, and he says that, he would have made the same amount of money.
Can you imagine?
What does that tell you? It takes the timing out of the equation. Because wealth creation, we're humans, right? Everybody wants to prosper. This country wants to prosper. This economy needs to prosper. We build wealth, right? So even when I invest in stocks, I don't invest in a stock. I am buying capitalism.
It's the fundamental legend of civilization. Is as long as there's no war or act of God, wealth is being built because everybody's working towards something, paying into something. That's the fundamental.
Over enough time. So
we're being Sasha'd and we're being Simeon'd, and I know Jazz is gonna actually slap me because he made me promise. I already broke my promise again because we do like to talk, and that's just the way it is. 5 minutes. I'm gonna time you. This question is, sorry, to wrap up what I was saying about the condominiums and about Greybrook. Barry, and we're actually stealing your time from networking. That's what we want to finish at 11:15. So I'm going to wrap this up in 5. Barry, put up your hand, please. That's Barry. Anybody has questions about Greybrook? Don't care what your question is. Hit Barry. Aaron is here. My entire team knows the project inside out because we're part of that project. But Aaron is here. If you have any questions on that location, why that location, what we believe that's going to be like, it's a very strong investment. You have no exposure to the interest market today because it's closing in 3-4 years. We definitely hope it's going to be a different environment, and we believe that it will be. But that's about Joya, which is the condominium opportunity. Everybody will get access to it. Take a look at it, see if it's right for you. Barry on Greybrook, you're on our list as they put their offerings out, and there should be one in short order. You will be notified to be able to look at that, judge it, dissect it, speak about it, and make a decision. Last question of the day is, how is the market? I'm not going to say how's the market. I'm going to ask you, what does Greybrook, what do your peers, you're a whole analysis team, you speak to economists, what is the general outlook for the GTA residential home values, sales volume? Do you think the people in this room have the confidence to put their house on the market right now? Do you think the people in this room will look at a resale investment opportunity with enough confidence to buy it right now? Give me your actual, where Bay Street meets Main Street, where do you see everybody here, including us? We live here.
Sure. Yeah, I don't think confidence is returned yet. Like, I think that it's returning.
Yes.
And it's returning mainly with the end of the market that just has necessity. Like, remember, we fundamentals presuppose that there's an actual need. Like, this isn't a speculative need. Like, it's not a bunch of people who are just moving capital from point A to point B, and when point B sucks, they're going to take it out of point B and point C. There's a need. We need shelter. So what's starting to pick up already is that the people who are actually, and this is more resale market oriented than it is pre-construction, but it's like now they're like, okay, I can't wait anymore. And now I feel like, interest rates could have went to infinity. And now I feel like there's enough professionals saying that this could be it. Okay. Which I believe it is. Now they're starting to say like, okay, well, I just can't wait anymore. I got to go now. It's not going to get any worse. They're not necessarily looking for it to get better.
So I think that's what changed, because January, like we have a very big team, and this brokerage has 1,500 agents. So we have a lot of data. The first 3 weeks of January, we saw more activity than the last 60 days of 2023 combined.
Yes.
And it's not because of Christmas that it was slow.
No question.
It was the absolute epitome of no confidence. Like, people were down, depressed conversation, where right now that news came out where, there's now interest rates fixed 5 years, 4.99, 4.95. Right now, bonds went back up a bit. I don't know what that's going to mean, but confidence is returning.
Yeah,
not back, but returning. I like that.
The bond market's moving just because the market is deciding whether interest rates cuts happen sooner or later. But we're talking about like a swing of a quarter.
Yeah.
Like, so it has very little significance in my mind in the longer term. So there's no question the data all supports a flattening and eventually a cut in interest rates. That is clearer today than it was 6 months ago. That clarity is now getting the person who has a fundamental need to sit there and say, okay, as long as it doesn't get worse, I can't wait anymore. They go in first.
Yes.
And then once that activity starts to bubble up, the confidence comes now to the investment community, who doesn't necessarily have a need because they can wait, they can whatever. But now they're like, okay, the market is getting better. And then that confidence returns. And then we're going to sit here, like I said, 5 years from now, look back at a chart, and nobody's going to be like, man, I wonder how that happened. It's obvious how it's going to happen. We're going to be sitting here 5 years from now, and it's exactly how it's going to happen.
It's exactly how it's going to happen.
So for the question of like, what are we seeing and what are we doing? I mean, like, we are looking at the market today as, I'm sitting here in 2024, in January 2024, as compared to January 2023, and my outlook is considerably better. And that is not on the basis of a hope and a prayer. Like, I'm a very pragmatic guy, and it's all about data. I got to protect money in shitty market. Oops, I don't think I can say that.
You can say shitty all day long.
I got to protect money in tougher markets, and we got to multiply it in great markets. At the beginning of January 2023, there was no end in sight to where inflation was headed. There was no clear direction. Policymakers, because they have to be, not because they're morons. Inflation, and that's a whole other topic, but like they have to get inflation under control.
Yep.
They had no choice but to crank interest rates, and they weren't going to mess around. So they were never going to go backwards. And that brief reprieve that we had, if you remember, in spring 2023, when they said, okay, maybe we're done. In my mind, we weren't done. And when the market spiked, I was like, oh shit.
Now they're back.
Because that just gave them more resolve to do it for longer and all that kind of thing. Now we're kind of at the end of that.
We
cycle.
weren't punished enough at the time.
Correct. So now we're at the end of that cycle. Look, it's not lost.
We try to lower our guard with that. We're going to halt it. And
We're good puppies now. We're good puppies now.
It's not lost on the Bank of Canada. It's not lost on the Bank of Canada that there's mortgage turnover in 25 and 26. Everybody's seen the statistics. So the point is they had a period of time where they had to hit it hard and get inflation under control. I think we're at that point where we're not done, but we are largely not requiring more aggressive interest rate increases. So we're going to see it coming down. That brings confidence back into the market. And then, look, it's just that supply-demand dynamic.
So I really think you answered my question accurately, and it's actually very much in line. I think because we follow so many of the similar people, I personally had this advice over the last probably 30 days, at least 5 times, say like almost verbatim. So I'm glad to hear it coming from you today, because that's in time for today. The message that the way I interpret this now for my clients, for every single REC insider, is what makes Jazz and I a little bit different. Because we've had about, I would say, a month. It was around mid-December when we sat down. It was with Tim was there. Who else was there? Economist from Altus. I can't remember his name. Anyways, we were having this conversation. They leave. We're like, what do we do if the market's going to shift? So right now we're in a shifting market because sentiment is shifting. And this is my last 5 minutes, my advice to everyone here. So this is my closing statement. We're in a shifting market right now. If you're going to invest in real estate, if you believe fundamentally that real estate is going to be worth more in 5 years than it is today, pay attention. If you don't, leave, because you're in the wrong room. So this is a real estate investor's room, like legit. Like, I'm not saying it for nothing. What I'm getting at is you're either going to buy pre-construction, and you have to be the most critical and selective than you've ever been before, specifically on who the builder is. Right now, unless it's Ellis Dawn, which is down the street from Joya, I love that. It's more expensive because they didn't buy it when they bought under the deal that you bought it at. It's a great project, though, and it's going to be built. Joya is the greatest deal in West Toronto right now. I guarantee it. Look at the numbers, run your own numbers, prove me wrong. You're buying at $1,150. I think it's going to be at $1,400 to $1,500 when it's closing. On a 600 square foot unit, that $200 a foot is 120 grand. Guess how much your down payment is? About 120 grand. It does what it's supposed to do. That's all we seek, is for that money to work the way it's supposed to. If you're not stringent on timing, you will win. If you have time pressures, you get messed with. So be comfortable in that. Know that you can close. Don't put yourself in a pickle. If you're looking for income properties, this is the biggest change we've done at the REC. We believe the biggest buying opportunity for a resale income property is this very second. We believe it so much that we changed the trajectory of our room. We went from having 10 pre-construction ninjas, the people that you speak to on the phone, no pre-construction inside and out. Now we cut it to 5 pre-construction and added a few of our resale ninjas off the street and onto the phone to hand select investors that are capable, that are not going to get hurt by paying 1 year's interest rates at 7%. Rather, they can refi in a year at 4 or whatever it's going
Much
to
less
be.
than
Don't
7.
know what it's going to
I
be.
assure you.
But the point is, right now, sellers are on the ropes. Many. If you have to sell, nobody wants to sell right now. They know their values are down. They're not dumb, but they have to. The necessity buyer is buying. The necessity seller is selling. This window, in my opinion, by July will be gone. By July, there's going to be enough confidence and enough stability. The volatility will be gone. People will know that, all right, we're going to live through this. Okay, let's make a move. But when 7 million people in 100 square kilometers make a move, it's a fucking wave. That's why it seems every time like sheep to slaughter. Like, why is everyone back right now? Well, because everyone's just like you, bud. You're not that different. So that's why it seems that way when it happens. Right now, Jazz, my business partner of 18 years, is personally mentoring daily 3 on a consistent basis, plus 2 more out of my office that are there selecting and analyzing properties every single day. So we're not waiting for you to call to say, hey, I found this property, does it work? We're looking for properties that work, and we're calling you. Saying, hey, I have 2 in Oshawa. I'll talk about that a different time. I have 4 in Oshawa. We have in select markets that we believe are the biggest value. There's properties they're being analyzed where you can add a basement, add a garden suite. On February 15th, I'm visiting a facility in Woodbridge that can build modular garden suites at $250,000 a pop. That can add up to $3,000 to your lot in income. What the same amount that you buy a downtown condominium for can be added to your existing home in the backyard. If that's scalable, you will know about it first. That's how money is made. So this is the opportunity. Pay close attention to each other. This is our time to network amongst each other, share your opportunities amongst each other, and ask any questions. Mr. Sasha?
Thank you.
Thank you for being here. Appreciate you. Thank you, everyone.
Awesome. Thanks, everybody.